Okay, so if you're looking to get a home loan this year, don't make it harder than it actually is. Even though underwriting guidelines are thousands and thousands of pages, believe it or not, lenders really only look at four things. It all boils down to how you fit into these four pillars of getting a home loan. Number one, we're going to look at your credit. What is your credit score? How have you been paying on your credit? The higher your credit score, the more loan options you're going to be able to get. If your credit score is below 620, I'm telling you, you are going to be very limited on a loan that you can actually qualify for. But if you need down payment assistance programs, anything above 640 opens the door to all kinds of options for you to be able to buy a home with little to no money out of your pocket. Number two is employment. We're going to be reviewing to make sure that you've had a consistent 2-year job history. If you've been changing jobs, that's fine, but we want to make sure that you've either been making a lateral move or you've been improving yourself to get a better job and more income possibly. And listen, if you're self-employed, you're going to need at least 2 years of being self-employed in order to qualify for the typical FHA, VA, and conventional loans. There are a lot of bank statement programs that you may be able to fit into, but we still need to be able to verify that you've been self-employed. Number three is income, and this is the big thing. Lenders have to make sure that they have verifiable income for you to qualify for a home loan. Let's say that you've just changed jobs and your employer said you're going to make a base plus commission. If you've never made commission before and the employer has told you how much you're going to make, we can't use that commission income because there's no history of it. So we want to see what your history of income is going to be and what the likelihood of your income is going to be to continue. Even if you're retired, we have to make sure that there's a verifiable source of monthly income. Now that can come from Social Security, it can come from pension, and believe it or not, even if you have a lot of assets like an IRA or 401k, we can derive income from those assets to get you to qualify for a home loan. Number four, we're going to look at your assets. We're going to be reviewing bank statements, 401k statements, IRA statements. If your down payment and closing cost is going to come from those sources, we just need to know where that money is coming from. It's pretty simple. We're going to look for large deposits. We're going to make sure that there's no outstanding debts that you're paying on your bank statements that we don't know about. And we're going to review your bank statements page by page, line by line. And really, that's it. We're going to look at those four things to get you to qualify for a home loan. Now, don't think that you can pick and choose which ones you want us to look at. Just because you have a really high credit score doesn't mean that we're not going to look at your assets, and it doesn't mean that we're not going to look at your income. All of these come into play for you to get a home loan. Purchasing a home just is not that complicated. If you have questions about purchasing a home in the state of Florida, please feel free to reach out to me.